Okay, today we will start with the Ebtax module. So first we'll start with the basic setups which are required for Ebtax, and then we will proceed with creating a few transactions in AP and AR to see how system calculates tax. Okay. So first, we'll get into the background of Ebtax. What is Ebtax? Why do we need to go for Ebtax? Okay, so EBTax is a tax engine in Oracle R12. In 11i, we do not have this EBTax as a separate module. So in 11i, if you want to create a tax codes and tax setup, you need to do it in AP, and then again you need to do in AR. So it's like scattered everywhere. But whereas in R12, everything is centralized in one particular module, EBTax. Whether you want to do a tax setup for O2C cycle, which includes AR, or for P2P cycle, which includes AP. You need to do the setups in EBTax module, single source wherein you need to perform your configurations. Some of the customers, apart from implementing EBTax, are like on the top of EBTax. They actually try to integrate the external tax tools, something like Vertex, Taxware, Fabrics. So these are the external tools which are certified by Oracle, and those can be integrated with Oracle. So the reason why customers goes for Vertex or Fabrics or Taxware is because from a reporting perspective, especially in US, Vertex is a very famous tax tool. It not only performs the tax calculation, but also it meets all the local taxation reporting requirements. EBTax has also got a couple of reports, but the most of the tax reports which are required by the US government are available in the Vertex. So even though you go for EBTax, if you are not using Vertex, then some of the reporting you need to do it manually, because those reports are things are not available in EBTax. So even in our current client, for a couple of operating units, we are using EBTax, and for most of the operating units, we are using Vertex. As I said earlier, we have got roughly 40 operating units. Out of 40 operating units, there are roughly 30 operating units for which we are using Vertex. So you can use either Vertex or EBTax or some other external tax tool based on a operating unit. So for certain operating units, you can go for Vertex, and for certain other operating units, you can go for EBTax. EBTax. Okay. So with this in the background, we will now get into the regime to rate flow. So that's what is called that's what includes the entire configuration in EBTax. So R to R flow, regime to rate flow. Okay, so these are the major configuration in EBTax. So what I did is, like, in order to save time, all this configuration I had already completed, but now I'll query for this configuration, get into each of those configuration, and I'll explain you what we are doing there. Okay. Let me open the BR100. Okay. Okay. The first setup is creation of the responsibility. As usual, like in any of the module, the first thing is you need to create a responsibility, assign some profile option, and then uh, assign that particular responsibility to your user ID. So first, I had created a responsibility by name Tax Manager Reliance USD. So again, the menus and other things I had copied from the seeded Tax Manager Vision Operations responsibility. So this is the responsibility, and the application name for EBTax is e-business tax, and the backend tables are stored in something called ZX table, ZX. So ZX underscore are the tables wherein the data is stored related to the EBTax, and unique key and the data group application. So these are pretty standard. So the menu, as I said, like the menu and the request group, I just copied from the standard tax manager responsibility. And there are two profile options which you need to assign to this particular responsibility. So one is the ledger name, which is GL data access. So GL data access had given as Reliance USD ledger, and operating unit is Reliance Telecom. Let me just close this. Let me open my group structure. So I had taken this Reliance Telecom under USD ledger as an example for our EBTax. So you can do the setups whatever I'll be now explaining in this current session. You can do the same similar setups in the other operating units. But just for our training purpose, I had taken Reliance Telecom as my example. So hence the MO operating unit is Reliance Telecom, and the GL data access set is Reliance USD ledger for my responsibility. So I had assigned that particular responsibility to my user ID, and now I should be able to log into that particular responsibility. Switch responsibility, tax manager, Reliance USD. Okay, the first setup is called something called party tax profile. So you need to go to the navigation, party tax profile, parties party tax profile. Party tax profile, enter party type as operating unit owning tax content. So if I look on the if I click on the drop down, so there is something called first party legal entity, first party legal establishment, operating unit owning tax content. If you are creating your configuration, your tax configuration at operating unit level, you need to select this. But if you are doing it at a legal entity level, then you need to select any of these things, first party legal entity or first party legal establishment. Okay, for the time being, ignore these things. So now we are doing our tax configuration at the operating unit level. So there could be a scenario one legal entity can have multiple operating units. So take an example. In this case, one legal entity has multiple operating units, and if you feel that the tax structure everything is same for both the operating unit, you can select the tax the party profile as the first party legal entity. So that is, you will be doing the entire configuration under legal entity. But if you want to do it at operating unit level, select the corresponding operating unit or select the first party type as operating unit owning tax content. So in my example, we will be doing a configuration at the operating unit level. The reason being, in future if you want to do some kind of a changes at operating unit level, that is possible if you do it if you do your configuration at operating unit level without affecting the other operating unit. So always it's better to do the configuration at the operating unit level, even though if the configuration for these two are same, just do it at operating unit level, so that you need to do configuration twice, that's it. But in future, because some things you cannot change once the configuration is completed, or like once you complete the entire configuration, so better do it at the operating unit level, so that in there are some changes if you want, you can make it at that particular operating unit level without impacting the other operating unit. So you to select operating unit owning tax content and click on go. As I selected operating unit owning tax, my party name is nothing but my operating unit. If I select first party legal entity, my party name will be nothing but my legal entity. So in this case, I am selecting operating unit owning tax content. So my operating unit, my party name will be operating unit, which is, what is my operating unit in my current example?
Reliance Telecom.
Yeah. So select Reliance Telecom. Okay. So as I had already created this, it is asking me to update. Okay. If you have not created this, go back to the screenshots. It will show, I mean, once you click on go, it will show something called create tax profile. So as I already created, it is showing me, I mean, this is grayed out and it is now allowing me to update tax profile. So now when I click on update tax profile, it will show me, it will take me to the next screen wherein it will show you the options. Like, do not do anything, just click on apply. Okay. You need to check the checkbox, as I said, use subscription of the legal entity. If you want to if you want to use the legal entity configuration, then you need to check this particular checkbox. In general, we'll do not check this checkbox. And in most of the setup, there is actually a tooltip here. When you click on tooltip, okay, it will show us the what you call help information for that particular field. Okay, so basically this is very important. If you check the checkbox, this setting is irreversible. So in future, if you think that no, I should not have done that, it is not possible, then again you need to start from scratch. Okay, so in this particular step, we are not doing anything, just selecting the what you call operating unit owning context. Now click on next, and just without making any changes, click on apply button. So that's the first setup, tax party profile. And now we will start with the regime to rate flow, R to R flow. Tax configuration, tax regimes, create, that's the navigation. Tax configuration, tax regimes. So the good thing with Ebtax is the entire configuration, the regime to rate flow is in one screen. There are multiple tabs, so you should be able to complete tax regime, then tax, you go to tax status, tax jurisdiction, and so on. It is in a sequence. Okay, so first thing is we need to create something called a regime. Generally for one country we create a regime. All your the further setups will fall under this particular regime. Okay, so generally we create regime per country. So in my current example, I have taken United States. The reason being we are under Reliance Telecom, which falls under USD ledger. So my regime for my Reliance Telecom will be USD regime. So what I did is regime level is country. Okay, United States is my country. So if you have not created anything, this is the first time you need to click on create button. So as I had already created, click on go. Okay, so there are so many regimes which are created, this being a testing environment. Ideally you will have only one, and let me select the regime which I had created. So this is the regime which I had created, USD regime. Okay, so in this case you need to click on create button. Okay, once you click on create button, this is what system shows. Okay, you need to enter your regime name. So I use the naming convention of USD regime, and regime level is country level. So I want to have this particular regime at my country, which is United States. And what is the country? Country is United States. And effective start date is from 1st of January 1951. As I always said that, like in most of the configuration, not only in Ebtax, whenever you are doing configuration, you have to ensure that effective start date is say 1st of January 1951. The reason being, if you by default it will show the effective data, say today's date, say 15th of October 2017. Okay, this being a mid of the month. In a normal live environment, say take an example, you have completed your configuration today, and you will ask the user to start using this particular what do you call this regime to rate flow, or like this particular regime. If you try to it is always possible that October period is still open. Okay, he can always enter transaction with an effective date of, or transaction data 1st of October. If he creates any transaction with an transaction data 1st of October, then system will not consider this particular regime, because this is effective from today, which is 15th of October. So in order to avoid all those kind of practical difficulties, we always ensure that for all the configuration we just put 1st January 1951. The reason being, even I mean, it's not even mandatory that you need to go back up to 1951. You can just start from the start of the financial year or something like that. But there is no harm if you even put 1st January 1951. Okay. In some of the forms, the Oracle default value is 1st January 1951, and hence we use the same value. Okay, that's the regime. And then when you click on your show controls and defaults, there are some controls here. So I'll just go to the screen. I had already created this. Okay, click on update because I had already created. Okay, this is what I had entered. Click on show controls and defaults. So at regime level, there are some controls which you need to provide, which is similar to some kind of your system options or financial options or payable options in other module. And so these controls in general, most of the controls we will give at a regime level, and this will flow to the next levels, that is your tax code level and other levels. So whatever you enter, most of those things will get defaulted there. And if you want, you can make the changes to these defaults at the lowest level. So the control says allow tax recovery. Allow tax recovery is like Okay, so before I proceed with those things, I think I need to even cover a couple of concepts. First thing is input tax, other one is output tax. Okay, input tax is the tax which you pay on AP invoices is called input tax, and output tax is the tax which you get from the customers on AR invoices is output tax. So in general, forget about EB tax. In real world, like whether it's India or US and any country, okay, you sell some goods on which you collect the tax. Whether it could be called the tax could be called VAT, or it could be GST, or it could be sales tax. These are just a different naming convention, or like different kinds of tax which are charged in different countries. Okay, one is called VAT, other is called sales tax, another is called GST, which is goods and sales tax, and it could be called any other tax. So that tax is called output tax. That is the tax which you collect from your customer. So take an example: you got revenue of say $100,000 in a financial year, and on $100,000 you collected say $10,000 worth of tax. Okay, remember whatever we are talking about in EB tax is the indirect tax. So in normal taxation structure, tax is divided into two categories, which is called, one is called direct tax and other one is called indirect tax. So income tax, wealth tax, okay, these are the examples of direct tax. Indirect tax is nothing but all other taxes, all most of the other taxes like GST, VAT, excise duty, customs, what else, sales tax, all these are called indirect tax. EB tax is a solution for the indirect taxes, not for the direct taxes. All tax topics whatever we are talking about, or all the tax tools whatever you are talking about, this vertex, fabrics, taxware, all these are actually indirect tax tools. Similarly, EB tax is also indirect tax tool. Okay, so all these indirect taxes whatever you charge to the customer when you sell something are indirect taxes, and that is also called as output tax. Okay, so in this example you have collected a tax worth $10,000, and in AP, whenever you are purchasing something, okay, the law says that when you are purchasing something, now in this example we are Reliance Telecom. Okay, so obviously we even purchase some kind of equipment or something which is necessary for us in obviously running our business. So it could be even raw materials, or it could be a stationery, or it could be anything. There are certain items, okay, not all items, there are certain items on which you, when you purchase something from your vendor, okay, he'll give you an invoice copy, and invoice copy will have a tax. Am I right? Yes or no?
Yes, Sarvesh.
Yes.
Okay, so what law says is, on certain goods whatever you purchase, you pay VAT or GST or any other kind of tax. So take an example: you paid a tax worth of say 5,000 on those purchases. It could be more than that, but law says that you can collect only some, you can consider only some kind of a tax, and those tax whatever you pay on your purchases can be recovered. So that is called recoverable tax. So when I say recovered, that means now your total AR tax, whatever you have collected, ideally what you need to do, as you know that like GST, VAT or excise duty, whatever is there, whatever is charged on our products and whatever we collect, it is our responsibility. Again, you need to pay that particular tax to government. Okay, so obviously in a simple world, if you go to any shop and the shopkeeper charges you say 10% GST, okay, that shopkeeper is liable to pay that particular 10% whatever he is collected from you to the government as is, without deducting anything. Whether really the shopkeeper is doing that or not, it's a different story. But law says that whatever is being collected as a GST or a VAT, you need to collect that and again pay it to the government. He is indirectly collecting from us and paying it to the government. So from a customer perspective, okay, the customer who is actually what do you call paying that particular tax, he is indirectly giving it to this. The tax is actually going to the company who is selling the goods, and from company it is going to the government. So that is the reason why it is called indirect tax from the customer perspective. So in this example, 10,000 is the tax which I had collected in AR, and 5,000 is the tax which I paid in on AP goods whatever is purchased. So government says that you can net off this 5,000 from 10,000 and pay me only 5,000. So this is called recoverable tax. There are a lot of taxes. Some, see, as I said that like all the taxes on your AP cannot be recovered. Only some taxes can be recovered. If it is not recovered, then that is called non-recoverable taxes. Okay. And again, what are those goods on which a tax can be recovered and how you identify? That is the business headache, not your headache. Okay. So there are some taxes which are paid on AP, which is called an input tax, can be offset with your output tax. And at the end of the financial year, when you are making a payment, you need to make a payment of only $5,000. So that is the concept of the recoverable tax. So this particular checkbox says that whether we can create such kind of a recoverable tax codes. Then we are checking this particular checkbox: allow tax recovery, allow override and entry of inclusive tax lines. So allow override. So if whether you want to override whatever the tax generated by this system, if you check this particular checkbox, it will allow you to override. If you do not check this particular checkbox, system will not allow you to override tax whatever system has calculated. And allow tax exemptions and exceptions. So there is something called exemptions and exceptions. Okay, what are tax exemptions and exceptions? So I'll give you an example of tax exemption. Okay, so what is our company? We are Reliance Telecom. Okay, we are selling goods to a particular customer, and there is a say 10% GST. You need to charge 10% GST on the goods whatever you sell to the customer, collect that and pay to the government. But if you are selling something to government, okay, government is exempted from paying income tax. Government is exempted from paying all these indirect taxes. Okay, so when you are paying something, when you are selling something to the government, government is not allowed, I mean, like, we should not charge tax on the goods which is sold to the government. So those are called exempt customers. Okay, that is called exempt. So there are various ways in Ebtax through which you can make a customer as an exempt. That is a one way, so the system will not calculate any tax. Or when you are creating transactions, you can select something called exempt tax code. So I'll show you in the next screen, like whenever you are creating an exempt tax code, you can put the tax percentage as 0. If you put the tax percentage as 0, okay, then even though when you assign that particular tax code in the transaction screen, the tax calculation will be 0. So that is the one way of ensuring that no tax is calculated on the exempt customers. Government is one example. The other way would be in the customer definition itself, you can check some check boxes, okay, so that that particular customer will become exempt customer. Okay, and next thing is tax exceptions. So there are various kinds of tax exceptions which you can create. So from my training perspective, I just taken one example. I'll explain you that when once the entire configuration is completed. So tax exception is, as the name itself says, exception. When you are selling one particular item, say XYZ, to any of the customers, generally the tax percentage should be 10%. But when you are selling the same item to a particular customer who is located in particular location, okay, the location could be a SEZ zone, which is a special economic zone, or it could be a tax-free zone or something like that, then you need to charge him only say 60% or 80% of the tax, or you need to charge him only say 20% of the tax. So that means it will be say 2%. So charge him, instead of 10%, charge him only 2%. So that's what law says. Again, that particular information will be provided to you by the customer. You need not break your head. So there are various kinds of tax exemption which government provides. So in some cases says that, okay, you're selling so many different kind of items. Okay, as far as this particular item is concerned, charge only say 1%. For all the customers, generally you are charging say 10%. For this particular item, charge only 1%. If you are selling the goods in a rural area, okay, charge only 0.5% if you are selling this particular item to any customer if the customer is located in special economic zone. Or charge a tax of 0% when you are selling this particular item to so and so location for next 5 years. After 5 years you can charge say 10%, but now for the first 5 years, in order to develop the particular place, I am encouraging the companies to set up their what you call locations in that particular place. So charge them only, say 0%, something like that. Okay. So there are various kinds of rules which you can write in your EB tax to meet any kind of a business requirement. That is what is your tax exceptions. So what are the exceptional rules which we can build? And there are other default values. What is my tax currency? So obviously it will be a functional currency, which is USD. And minimal accountable unit, I mentioned 0.01. You can even make it as $1. So minimum amount on which system should start calculating tax if there is a tax which system needs to calculate. A rounding rule, what is whether you want to go for up or down or nearest. And tax precision, that is the number of decimals is 2. Okay, there is nothing in the compounding. And then click on continue. Okay, so when you click on continue, it will bring up to this particular screen. Okay, in this particular screen, first thing is what you need to do is this is still part of the tax regimes. Okay, your party name is Reliance Telecom, as I mentioned that earlier, because we are doing our configuration at the operating unit level. So as soon as you select, I think in the previous screen we already selected that Reliance Telecom operating unit owning tax content. So these two will get defaulted here. Address is defaulted. This is also defaulted, and under the configuration for taxes and rules, go back to my previous screenshots. Okay, so here you need to, this is a drop down. Here you got couple of options here. So always select company common configuration with party overrides. So when I select common configuration with party overrides, that means the whenever the configuration is being created, the configurations will have owner name as a global configuration. So the significance of the global configuration is basically in some cases these rules or whatever you have defined here can be used in other regimes also. So that is the significance of global configuration owner. So I'll show you that like in some of the places you should use the owner as global configuration owner, and in some of the cases you need to use owner as your operating unit. Okay, so the configuration for taxes and rules, select the value as common configuration with party overrides, and even for the configuration for product exception, this is also use common configuration, so that in the next screen you will be able to see owner as global configuration for these setups. And effective date again for January 1951. Okay, once you click on continue, you'll be able to see the message tax regime was successfully created. So click on just finish. It will show you a message tax configuration was successfully completed. So that's with regard to tax regime.